All right. We're back for another episode of the YVR REMO Show. Derek, Tyler, and myself going to handle this one, and it's certainly top of mind when it comes to standing out in a competitive market, and that's what we want to touch on. There's a few tips and tricks that we've seen that have really worked in the past, and we're going to go rip through each one of those. Not all finance related, but a lot of this will, of course, have a financing theme. So why don't we just jump right in? I know looking at the markets a lot, really right across the country, but especially in our local region here, we are seeing multiple offers pretty well on every home, especially a single family home. In some cases, we've seen as many as 50, 60 offers on one property, which is absolutely insane. And, there's certain things that you can do to stand out and make your offer as competitive as possible. But, if it means, going extremely over asking price, that's probably not something we're going to recommend right now. But, if there's a way to ensure that, what your max offer is, I think that's ultimately where we kind of want to start off, is just really knowing and understanding what your maximum offer could be, not just from, hey, how much do I qualify, but also just your comfort level given the interest rates and total costs that are involved. So why don't we just kind of rip through that to start?
Yeah, I think the first thought I really have on that is with finding out your max offer is don't do anything halfway, right? So many times we get calls from people that just say, "Yeah, I just kind of want to know how much I qualify for. I don't want to do a full pre-approval. Can you give me some rough numbers? Here's what my income looks like. Can you just kind of give me a rough figure of what I can qualify for?" And that's why I say don't do anything halfway, because we've all helped those people that don't want to fully commit, fully jump into getting a pre-approval, which really is no cost to them. Most of the time, investment is done by the mortgage professional up front. Yeah, you might need to bug an HR department member to get a job letter, an accountant to get some tax documents, but at least you're dealing with the facts, like what you can qualify for versus. Because we've all had it, right? Like we've all had those like kind of halfway conversations with people. Next thing you know, like, hey, I'm going into multiples. Can I write subject free? Or hey, can I go up an extra 50 to 65K? And it's just like, I haven't even got a pay stub from you, right? So don't do anything halfway. Get a real legit pre-approval. Talk to a real professional. Find out what that maxed offer amount is. I tell people that all the time when we're going through the pre-approval process. Like I deal with the mortgage money. I'm going to tell you exactly how much you qualify for. Doesn't mean you need to borrow that, but at least it gives you a roadmap of what's possible. And at least we've left no stone unturned. We pulled your credit. We know where your down payment's coming from. We know how much income we can use. Maybe through the application process, there's other income we can use that you didn't know we could use, right? The one thing that jumps to my mind is Canada Child Benefit income. I mean, we're throwing that on every deal we can these days. A lot of people don't realize that, but that government kickback you get if you've got a couple little squirts at home, guess what? That might mean you can be more competitive with your offers. So that's why I say don't do anything halfway. Go through the full process so you can find out what your max offer is, which is going to be really important when you're getting into a competitive market like we're in right now.
You hit the nail on the head. The only piece I would suggest is like for someone that maybe doesn't even know what halfway is, like someone that hasn't been through a proper pre-approval before, you probably wouldn't know, like if a broker or a banker only asks you for a pay stub and like they haven't pulled credit, again, like most people, if you haven't been through it, like why would you not trust this person, right? So just a little bit of context, like a true pre-approval is typically you're going to be providing like in and around 10 documents inclusive of like T4s and job letter, pay stub, notice of assessment, consent form, ID, down payment, like actual bank statements so we can look at where your down payment's coming from, because that can cause a lot of issues too, right? Someone who's self-employed, it's like your full tax returns for at least the last 2 years, corporate financial statements, right? Like if they're not asking you for the bulk of that, you're probably not getting a proper pre-approval, and you probably need to have a deeper conversation with them or get a second opinion. So that's the only piece I wanted to add there.
Yeah, and I think just two other factors that come in play here. Again, getting really into like a true pre-approval, which we've talked about in the past. Property taxes on a property per year, and if you're looking at a stratified home that has strata fees, these are numbers that actually could alter your maximum dollar amount that you qualify for. So really honing in on those exact numbers if you are going to spend to the penny of your qualification. Just keeping an eye on that as you look at properties and understanding that could adjust the purchase price up or down slightly. And having access to a really good broker with tools that can help you navigate those situations is key. So yeah, we'll leave it off on that front. And just always, I think one piece of caution here is just going over asking price in the event that you have to do that. Just really ensure you're comfortable that with the agent you're working with from a realtor perspective, that they're advising you in all the right areas, and just ensuring that you're not going too high over asking prices is always key, especially when we're seeing as many as 50 offers on one property. So just moving on here. Another area that we find can really help a purchase price is down payment. Just how much you're working with. If we're working with a minimum down payment amount and putting us in a situation where we're having to use CMHC, the qualification could be impacted there, or it would be impacted for sure in regards to how much you qualify for, because we're using, say, a 25-year amortization versus a 30-year amortization. So just understanding that if you have access to extra funds, such as an early inheritance or just any funds from a family member, or funds that are maybe tied up in some sort of an investment that you haven't done the due diligence to see if you can get access to, just really trying to look at all options from a down payment perspective to boost you over the 20% mark, or ultimately just ensuring you have extra cash resources to increase your offer if ultimately that's what you have to do to win the deal.
Yeah, you see a pretty dramatic jump in qualification when you go from an insured mortgage, anything less than 20% down, until you clip that 20% down and you're above. It's just your amortization stretches out to 30 years. Also, the options within a certain specific lenders will open up pretty dramatically as well. The way that rental income is looked at, if you're buying a house with a suite or if you own rental properties, qualification ratios. We have certain ratios that we have to stay within for the purpose of mortgage qualification. And once you get to 20%, there are a couple lenders that can be quite flexible on that if you have a strong application. So, if you can't get to 20%, it's still worth pursuing 100%, but you will see a pretty dramatic uptick. Like we've seen upwards of $200,000 change in qualification just from someone going from 10% to 20% down.
Yeah, absolutely. And I won't jump back into the pre-approval piece, but especially if you're coming to the table with less than 20% down, you really, really, really need to nail down what that max number is, and almost take a little bit more of a conservative approach, because as Dean mentioned, property taxes and strata fees play a major role. And if you're shopping in maybe like the $600,000 to $700K mark, like those property taxes are going to be pretty dramatically different from, say, Surrey to Maple Ridge to Langley, and those can impact, $5,000, $10,000, $15,000 in qualifying amount, and suddenly your max number is fluctuating, right? So, yeah, really good points there, and just nailing down what that max down payment number looks like is just as important as the max offer. And I know last week we were getting into subject-free offers. They're not comfortable conversations to have with family, but sometimes people have family that say, yeah, we'll help you out. We'll give you a bit of money. We've all had those conversations, and we'll say, okay, well, what's that number look like, right? And if it's kind of floating, then that means so is your pre-approval, and so does your max purchase price. So maybe it is a tougher conversation, but if you go to the bank and mom and dad or grandpa, grandma, whomever, find out what that number looks like, and that's going to really help you identify which properties you can go over ask on.
Yeah, I mean, it can certainly be an uncomfortable conversation going to family for these reasons, but we've been surprised to just see how many family members are looking to actually enjoy that early inheritance and actually see the joy of it being used, and especially furthering their grandchildren's or children's lives forward from a perspective of being able to get into the market. So certainly a good conversation to have and see what you can uncover there. It's a good segue into the next tip, which would be the deposit. So at time of making your offer firm, which is usually the subject removal date, a deposit is due to the seller to show that you have some skin in the game. Typically, we see the average deposit in our market around 5% of the purchase price is usually what we see, 5 to 10%. If you have more money and you are putting more money down on the property, consider increasing this deposit. Reason being is it really does show you're serious about this offer, and we have seen deals collapse because clients ultimately can't end up closing, and from a seller's perspective, they're going to feel far more comfortable with a with a buyer that has a larger deposit, and in some cases they may actually take a smaller purchase price because the such a strong deposit. So just something to consider there is an ability to really stand out.
Yeah, I would just add to that, like money talks, right? Like if you have a larger deposit, that makes your offer more appealing. You actually made me think of something else. And we run into these situations all the time, especially when someone's selling and buying, and maybe they don't have a lot of liquid cash around. A lot of times you run into buyers that, where maybe it gets to the offer stage, and they don't have the cash for a deposit, right? So especially if you're selling and buying and everything's coming from the sale of your home, the equity is your down payment. You got to know that, like, when you're going to make an offer on a place for say $1 million, you need, at least probably 50 grand cash in a deposit to give up front, right? So have those conversations early, because I know all three of us have run into that in the past. And if you don't have that, and maybe there isn't family that can help you out, believe it or not, there's actually deposit financing options for you where you can borrow that 50, 75, 100K for the window from subject removal to completion, so you can make your offer more attractive. I mean, it's not cheap, but if it gets you into the home that you want, you might need to go for it. But yeah, you made me think of deposit, and just especially if you're selling and buying, make sure you got to have that piece up front.
Yeah, that's a big piece. That's a really big piece. Just kind of moving on to the next one here, because we got a few more bullets to run through. Dates, right? So this is dependent, like, a first-time home buyer or someone that doesn't currently own a home is typically going to have a bit more flexibility here, because they're probably not trying to line up dates with the sale of their home and what have you. But this is a piece that, most realtors will figure out before it's time to write an offer, like what dates work for the seller. Because again, sometimes that seller's already bought a house and they're trying to align things. And if you can be flexible and align with what they're looking for, it will obviously put your offer a little bit at the higher in the list. Another consideration, just from a timeline perspective, when it comes to financing, even if you're fully pre-approved and you have a strong file and everything's clean, typically lenders don't want to see completion earlier than about 3 weeks. And the reasoning for that is, once your offer is accepted, we're submitting it. We're typically getting an approval within a couple days if it's an easy, clean file. But from there, we also have to consider that a lot of the work is done by human beings, right? Like an appraiser has to go out there. That can take 3 or 4 days. Lenders have to review all the updated documents again and sign off on it. The lawyer typically needs about a week, right? And banks want to have everything done, all conditions met, appraisals, down payment signed off, signed commitment. You got to pick a lawyer. So it's all pretty minor stuff, but it does take a bit of time just because there's some back and forth. And banks want to have absolutely everything done, typically at least 1 full week before completion, but ideally 2 weeks. So the bare minimum that we usually tell our clients is a 3-week completion date, but ideally it's a month.
Yeah, I mean, it's a big one. There's a lot here. And, some people think like making a quick close is attractive, where in some cases that actually adds more stress to a seller. So just, being able to communicate that you're flexible, having that open-ended date discussion. Like if you have the ability to close quick, great, communicating that as part of your offer, but also outlining that you could close later too, because you got to keep in mind, like they may have to go find a house to purchase as well. And to be able to, to essentially stomach the idea of selling their home quick and then going and finding another home could add a lot of pressure, unneeded pressure that they don't want. So just really communicating that you're flexible, and being flexible is easier said than done. Of course, if you're selling a home, I mean, you may just be restricted to the dates that you've already, agreed to on the sale if you've sold before going and buying. Sometimes this is not, such an easy discussion, but if you're a buyer that didn't have to sell, I mean, you're in a great position here. And if you're able to, or if you have the, the confidence that you could sell your home after, making a purchase, then you can tie your dates up to with the house that you're selling. So yeah, a bit of a big one to unpack, but there's a lot there, and there's a lot of times we do see dates literally kill deals. So if you can be flexible here, this is a big one in a competitive market. I almost never see this get accepted. So what we're talking about here is no subject to sale. So trying to avoid making your offer contingent on a subject to sale is a big one. it's, if you're writing an offer and you have to sell your home and that's a subject that you have in your offer, it's very unlikely that would be accepted in a competitive market.
I've had one this year, and it was out in Loon Lake, British Columbia. So it was depending on the market. Yeah, you're absolutely right. And yeah, I mean, it's easy for us to say that because that's terrifying for a lot of people, right? But generally, what we see in this type of market is it's much harder to buy than sell, right? So anytime you're selling and buying, especially in the lower mainland, and I have this conversation all the time. I know we all do. There's always a bit of a leap of faith aspect to this, right? So, but yeah, I haven't seen in any competitive market a subject to sale clause. Maybe around, I don't know, the winter of last year when the market was really slow. But good luck trying to get that done now. So, like I say, it's definitely a lot easier to sell and buy in this market. So typically what we're seeing a lot of people is tie up the home, get the offer, and then try and sell their home really quick. And we talked about max offer and down payment. Just to piggyback on that is understand your net sale proceeds in that situation. How much are you going to net from your sale, from paying out your mortgage to the penalty, if that's applicable, what the realtor fees look like? Are there any other costs that need to come out? You need to be really sharp with what you're going to get out of the sale of your home when you're going to consider moving or removing a subject to sale clause.
Yeah, good points. I mean, there's not too much more to add there. I mean, of course, it can be a scary time to kind of put yourself in that situation, and it's not always easy. But having the right professionals to prepare you, it really makes things a lot more digestible. And highly recommend doing really all the tips that we've kind of talked about leading up to this point in preparation for that. So kind of the next step here that I wanted to touch on is there is due diligence required on properties. We've talked about this at length, where it comes from a home inspection, not necessarily required for financing reasons, but a home inspection is super important for all the reasons that we discussed on, our episode around going subject free. And, and then in addition to that is the appraisal, which appraisal is almost, always required for financing. Not always, but a lot of times an appraisal is going to be required to get your approval. So these are two items that are big from a due diligence standpoint. Any other inspections that might be required, such as, well water testing or septic field testing or any sort of engineers if you're going to be, building or doing any sort of additions. There's a lot of things that could come up depending on the property. These are things you should really consider doing prior to writing an offer. And, we do have that ability to take advantage of pre-inspection items, especially in a competitive market where a lot of sellers are actually picking a date that they'll accept offers. So you have the lead time to actually complete some due diligence. If you're really, really interested in a property, you really want it, consider investing in these items before making the offer. It will show the seller that you're really serious about the property and you're doing due diligence before even writing an offer. It will really speak volumes to the seller when they're looking at other offers that are coming in and knowing that you took the time and the money to do your due diligence prior is a big piece.
Yeah, and obviously, we're tying this all into a very competitive market, which is what we're doing right now, right? In a typical market, if you're not competing, you would get subjects and you would deal with everything after, just so you don't run the risk of potentially, paying $600-700 for an appraisal and inspection, and you don't end up getting the home. But that's just part of it, and I tell people it's kind of just you got to look at it. Obviously, there's an emotional part of the transaction. It's massively emotional for most home buyers, especially if it's going to be a primary residence. But there's a little bit of you got to think of it like a business transaction as well, right? And if you're not doing those items, and you are competing, you're probably just literally not going to get the home, right? So if you lose that money, it's kind of just a cost of trying to get the transaction done, right? And hopefully on the next one, it goes a little bit smoother. But yeah, all things that are a little bit difficult to come to terms with, right? Like spending that kind of money and not really knowing where it goes. But we've seen it be a very successful tool and strategy for a lot of our clients. And I think just last piece here is, a lot of the realtors that we've worked with over the years are awesome at suggesting this. And we've seen a lot of these letters, which is pretty cool. But putting together a bit of a letter about like yourself and, whether you're single or have a family, if you have a dog, a cat, whatever, telling the sellers who you are, right? Because again, there is that emotional attachment to someone, especially when it's been their primary residence for 5, 10, maybe they raised their kids there, right? And if you have two offers that are the exact same, and someone has stood out a little bit more because they put together a letter and a photo of themselves and their kids, and their son plays hockey and the seller's son played hockey. Those are types of things that might actually kind of pull on the heartstrings and get you in there, and we've seen that be a really good tool as well. I think it's becoming more and more common, so there's probably a lot of those letters floating around. But it's definitely something, you gotta put the time and effort in, right, in markets like this.
Yeah, I've done it. I've done it twice, right? And whether or not it was the reason that I got the property, like who knows? But there are still real people on the other end of that transaction on the sales side, and you don't know their motivation. Maybe an extra 5, 10, 15, 20, 25,000, whatever that number is, isn't that important to them, right? Maybe they want to see somebody, a good, young family or whoever come into the neighborhood. So you never know who's on the other end of the sale. Like, sure, we like to think it's all about the dollars, but you're putting your best foot forward, and there's no real reason not to.
Yeah, I mean, those are some great tips. I'm sure we missed a couple, but I think those ones really hit home for most people. And I know for a fact that we've seen these types of tips really put people, aside from or put them at the top of a list when it comes to multiple offers. So definitely something to consider here. And I hope you see value in these episodes, and especially episodes like this where we're really trying to help borrowers just again get ahead, which is tough to do in Canada's real estate market in general. So if there's any other tips or any other things that you want help with, please don't hesitate to reach out. We're happy to address all topics that come into our inbox. So again, thank you for listening. We appreciate you, and have a great day.